deal? I am Eniola and I'll be talking to you today again about the concept of withholding taxes. The knowledge of withholding tax is very important for every business owner, every landlord, and let me explain why with this very short scenario. Imagine that you own property in Banana Island and you decided to rent this your property to Eniola for 10 million naira. Eniola pays you 9 million naira, and when you call her for your remaining 1 million naira, Eniola tells you that every tenant is required by law to withhold 10% from every money they pay to any landlord as rent, and to remit this 10% to tax authorities, which is why she paid you 9 million naira, and that your remaining 1 million naira will be remitted by her to the tax authorities. I'm sure you would not find this funny. Well, I'll tell you what you could have done at the end of this video. For transactions that withholding taxes apply to, you already know from this video that withholding taxes apply to rent, and that every tenant is required by law to withhold 10% from any amount they pay as rent to the landlord and to remit this amount to the tax authorities. Same applies when a person hires equipment from another individual or from a company. The person hiring is required by law to withhold 10% from the amount they hire for the equipment and to remit this 10% to the tax authorities. If you're a business owner, no taxes will be withheld from you as long as you're acting within the ordinary course of your business. But immediately you start acting outside the ordinary course of your business, taxes will be withheld. Let me explain this further. If Simi sells bags in Yaba Market, every customer of Simi that buys bags from Simi in Yaba Market would not be required by law to withhold taxes from Simi. But immediately Simi enters into a contract of supply to supply 20 bags to Sisi in Oshodi Market, Simi has acted outside the ordinary scope of her business, and Sisi will be required by law to withhold 5% from any money she pays Simi for the bags. For some other transactions, the withholding tax rate depends on whether the receiving party is an individual or a company. So, if you are to pay royalties, management fees, technical fees, professional fees, consulting fees to a company, you will be required by law to withhold 10% and to pay this 10% to the tax authorities. But if you are to pay those same fees to an individual, you will be required by law to withhold 5% and to pay this 5% to the tax authorities. So sometimes the receiving party determines the rate of withholding taxes that would apply. Now back to our landlord's consent. There's really nothing that you as the landlord can do because Eniola is actually acting according to law by withholding that 1 million naira and by remitting that 1 million naira to the tax authorities as withholding taxes in your favor. The best you can do is to actually ask her for the withholding tax credit note that she received from tax authorities in respect of that 1 million naira, so that you'll be able to use this withholding tax credit note to offset your future tax liabilities. In practice, you'd have been able to completely avoid the situation by inserting a clause into the tenancy agreement you have with Eniola that provides that the tenant will be liable to pay all existing and future rents, rates, taxes and assessments that the landlord and the tenant will be liable for in respect of the property. As soon as Eniola signs this tenancy agreement, she becomes liable to pay your 10 million naira in full and also to pay to tax authorities 1 million naira as withholding tax in your favor. This clause is called a gross-up clause, but it has been decided that every gross-up clause is illegal because it transfers withholding tax liabilities from the landlord to the tenant, and the law says that no withholding tax liabilities shall be transferred. As such, the first option, which is that you collect your withholding tax credit note from Eniola to offset your future tax liabilities, is still the best option.